All right, guys, welcome back to another episode of Forex Tech Magazine. It is your host, Lewis. Today is January 28th, 2019. Man, this month is almost over. If you haven't made any money yet, hang tight, sit tight, stay right there. Because hopefully, the tips and tidbits that we give you today, you better turn it around for yourself. And if you have been making money, you've been listening to us, well, sit back, continue to listen to us, pat yourself on the back, and hopefully, with the information we share with you today, you'll make even more, right? But before we get into all that, let's get into this, which is the disclaimer, and it goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for information and educational. It should be considered for educational and entertainment purposes only, right? If you're seeking any advice or you're seeking financial advice, then you should be searching out the help of a licensed, competent advisor. That would be our suggestion to you. Sorry, I'm a little off this morning with the disclaimer. Just got a really bad headache. Think I may be coming down with the flu. But anyway, I'm gonna push through this. So once again, any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. If you are in need of financial advice, our suggestion to you would be to seek out the assistance of a licensed, competent advisor. There we go. Got that one off really good that time. That sounded perfect. So let's get into what you came here for, and that would be, my friend, to look at some trades. And we're not going to look at this trade. This is just something that I have sitting out there. But we will look at, let's get into, start with the bottom, work our way up, right? Great Britain pound, New Zealand dollar is where we was at last Friday. And man, how far up did it go last Friday? It retested the resistance once again, right? Unfortunately, it went up, retested on Thursday, went down, retested again on Friday. Looks like we're going to be powering our way straight up to our take profit, right? But what is this? Price went down. Ooh, price came down all the way back down to support. Bounced off support, came back down, went through support now, and now we're close back to our actual entry for this particular pair. So then the question becomes this: what do we do? Do we take profit, all right, and get out? Do we sit here and let it ride back? I mean, what do you do, right? This is the $1,000,000 question right here for most traders. What do? You get a situation like this right here. Do you go ahead and take your money and you leave, or do you stay in and wait to see what happens? Personally, I want to stay and see what will happen. Professionally, though, I would tell you take the money and leave. And you say that, Aunt Lewis, the answer is not an answer, and you're right, it's really not an answer. It comes down to your own personal preference. How much leverage you have on this particular trade, I would think, and what is it you ultimately are willing to do with this particular trade. What determines how you play this. And I'll tell you part of the reason why is you can look over here, and this, I actually had this pulled up, is that the see this British pound in limbo as Brexit vote approaches. What next? So what they're doing right now is they're trying to figure out what's going to happen next with this whole. What they're trying to do now is figure out what's going to happen next with the British pound. Right, the vote is coming up this week. There's another vote coming up this week, and so that's the reason why, in my opinion, you have a bit of a pullback. See, Brexit is absolute mess. On January 29th, the UK Parliament will vote on amendments made by Prime Minister Theresa May, Plan B, Brexit plan. Right, so this right here is something that's coming up, and it's gonna be huge. It's gonna have huge implications for the market. And I think what's gonna happen is that you're probably gonna see some downward to sideways movement until we get this. So that's tomorrow. That's coming up tomorrow. So that should be pretty huge for the market, right? Let's just check something here. So that's gonna be the Mars vote, and if you don't think that's gonna rock the market, you know, my friend, you don't know what's up. Also, too, we're getting economic information now from the U.S., which is freaking awesome because the government is back opened up again. Woo-hoo. I don't think they have this on the economic calendar. I guess because maybe it's just a maybe they consider it to be a non-economic event. I don't know. Yeah, but it's not showing up on there. Well, anyway, I'm not worried about it. But the reminder is this right here. That's what's coming up. That's going to be the big thing in the market. That's what's going to move the market. So now that you're aware of it, now that you know about it, something you need to be mindful about. Now, as you can see, we have a downward trajectory in the market right now. It's trending downward. I'm going to stay in this trade. All right, we got a stop loss in place. Not worried about it. If we take a loss on it, we take a loss on it. But I'm okay with that because I've already factored in how much money I would lose if I lost. I also factor how much money we make if we're correct, right? This right here, I would not consider to be a buy as of yet. If you're already in the trade, you can still stay in it and continue to maintain it. But if you're not in the trade, I wouldn't recommend getting into the trade just yet. It needs to do a couple things, and one of it is that it needs to cross over into the buy zone, right? Now, of course, this right here is a higher probability buy zone. This right here is a lower probability buy zone, but it definitely starts you getting back into the position where market is going to be moving up once price crosses over this downward trending line. Just kind of expect it to pull back towards it before it pushes up off away from it. Okay, but I wouldn't get back into it until it at least starts to trek over this one right here. All right. So for right now, this particular pair would be a hold until we get some further confirmation. Either it starts to move further down and it goes past the A, or it moves up past this downward trend line and pushes towards our take profit. So that's going to be a hold for right now. Let's look at the Great Britain Pound, Canadian dollar. Same thing. I mean, once again, went to the buy zone here, it's in the buy zone here, potentially buy zone here. Now it's in the hold position because it's following a downward trend. The crazy thing, this thing got crazy close to it. Crazy close, and it still ended up yeah, crazy close, didn't hit it, pull back, and so where we at right now with this one. So once again, this is a hold, right? Until price crosses over that, let me stop being lazy here. Until price crosses over that downward trend, all right, with a close over it, not just push through and then drops back down, but close over it, and you know what it looks like. Something like, you know, one of these here, right? Closed over it. Boom, price powered up. Until it does that, stay out of this one. Hold. Something you can look at, something you definitely can watch, but hold. Wouldn't get into it just yet. Great Britain Pound, Japanese Yen, same thing. That's the downward trajectory. And also, to kind of keep in mind where your take profit is at. So right now, the completion of this Fibonacci sequence is just going to be up here to this red line, right? So it's not like there's a huge upside potential here. You know, even if you did get into this. Well, this is 112. That's not bad. Then the next question would be, well, where do you put your stop loss at? So you put your stop loss at, you know, when these swing lows if you wanted to. Yeah, that wouldn't be a bad idea. Just kind of keep in mind, though, price could go back and retrace through that. So, but if you're, hopefully if you're trading like we're talking about, right, and you're coming in, and you're not trading until Price gives you that strong signal. It crosses above that downward trend line. The ideal is to be able to trade one with momentum behind you, right? With your back to the wind, right? And you need that push up. So even if you put your stop loss here, you would your risk reward would be adequate. The likelihood of you hitting your stop loss would be it'd be less likely, right? Because you got momentum behind you. Versus if you go ahead and you place a buy order now, the likelihood of you hitting the stop loss is really high because price is on it's trending down. It's not trending up. So the likelihood of you hitting this is pretty high, right? The next one, Great Britain pound, Aussie dollar. Buy. Boom, same thing. Once again, came close to the target, pushed through some resistance, came back through it, wouldn't trade it until gets on the opposite side of this trend line. And then we'll be looking to push it up. Yep. Not while it's on the back side of this, but it's on the opposite side of this, then we'll be looking to buy into this particular pair. But not until. Not until. And one more. What do we got here? Great Britain pound, US dollar. Once again, it's another one that looks like it almost hit. And as you can see, it's downward trajectory right now. Won't get into it until it starts going up again. Yep. Won't get into it until it starts going up again. And once again, you put your stop loss back over your swing lows. Boom, take profit. If you decide to get into it, all right? Boom, so there we go, folks. Yeah, this right here is just a bad risk to ratio. I wouldn't even probably get this even after it goes up. Unless it's just something that you want to do. You know what I'm saying? Something you want to do, go for it. But the risk to reward ratio on this right here is going to definitely be off. And may or may not make sense into it to get into it. I mean, if there's a lot of momentum in it and you're just trying to make some quick pips, you might go ahead and do it. And then just put and then do what we call a risk-free trade. You know what I mean? So this right here, you might use some leverage on it. Leverage it up. You're not going to make that many pips. But once you get over to the profit zone, just go ahead and put a risk-free trade on that thing and let it play out. That's probably the best way to trade these pairs for right now, because I do believe that once it starts to move, it's going to move fairly quickly in either direction, especially after that vote. The issue is, though, you don't really know which way it's going to move. Right now, everything's still in play as far as with the Fibonacci sequence. If you look at it, right, because you're still making your, haven't completed yet, but you're still in the process of completing it. This is your A, this is your B movement. Price came back down to your, 0.236 retracement. Price is moving up towards your D extension. So this is your A, B, C. Here goes D. But in the meanwhile, while it's making it with the D, of course, it has little, move up, pull back, move up, pull back. And so we're waiting right now for the next move up, which I think that next move up should come, and I could be wrong with this, right, but it should come after that vote on the 29th. It may come up before it. Sometimes, before a big event happens, you get a run-up in price, and then after it, then you get the sell-off. It's kind of one of those things where people say buy on the rumor, sell on the selling the actual news. So, we may see one of these type things occur, or you may see the opposite, sell on the rumor and buy on the news. I don't know. Because right now it's just kind of like, it's not, you know, it's trending opposite. It's taking profit mode right now. People are pulling money out of it, not putting money into it. But just kind of expect to see some type of movement starting on the 29th after that vote. Okay? The next thing we'll look at real quick before we get out of here is the Aussie US dollar and the, let's see, US Canadian dollar. Let's look at the US Canadian dollar first. There has been a crazy pair here for the last couple of weeks, man. When I say crazy, just because of the fact that we were in a downward trend, right? Price came up, went back through the A, right? So negated that trend, right? And so then you're thinking, okay, well, I was thinking too, okay, this must be an upward trend now. But then on Friday, it negated any upward trend that you could have possibly thought that you had going here. Price pulled back through. Let's look at something if we could. All right. Okay, so here goes some upward Fibonacci sequence here, and you see the first one got filled, the second one got filled. This third one right here, all right, which is the last one that was the price was working on, right, actually got negated because price went through the A, pulled all the way back down, so lets us know, well, guess what, we're back in a downward trending market. Now, why all this confusion? Why here we're going down, then we begin to push up, and we get 3 pulling up, and then this one going down? Let's do this. Let's go back. Clear screen out. Let's look at it on a bigger time frame. So some of the problems, some of the issues that you may have as a trader is that you're looking at something on one time frame and it looks like it's a buy. It looks like price is moving up, and then when you pull back and you look at a bigger time frame, you just find out that price is actually, momentum is actually going down. And so you can't figure out, well, why are your fibs not completing? Why is that you always get these fibs, but then you're halfway through the process, it goes and turns back the other direction, and that may be the cause of it, right? The other thing is maybe the time frame that you're looking at is just not really showing, it's not really a good reflection of where your fib should be at, right? And so over time, you kind of learn how to and where to place these things. It's like any other skill set, right? It's something that you got to work on, something you got to build up to, okay? But it's something that anybody can learn. I promise you, right? If I can learn it, you can learn it, right? So let's go back in here and let's look at this. So on the daily time frame, we see what price is pushing up since 2017, right? But then we notice that we get over here in January of this year, price starts to push down, then we get a pullback, and now it looks like it's resuming downward, right? So what is that telling us, other than the fact that we may be in some type of downward momentum right now, right? Potentially, possibly, right? So this is something that you got to pay attention to when you trade, right? Now, one thing that you could do, you could come in here and you can just use your fibs, smart fibs, boom, 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 come in and just find your swing low, place it, that's got negated, go back in, do it again. And you just do this over and over again, find fibs on the market. And what you notice is that it's putting fibs in, but then also some of these fibs are getting negated because price is going below it, right? So this is the last one here. And this brings up quite a conundrum here, right? Because here goes your A, here goes your B, This right here would apparently be your C, possibly, right? And that means that price then is going to extend up to here, all right? That'd be your D. And you say, oh my goodness, that is pretty freaking big move, pretty massive move. It's almost 1,000 pips. It's 990 pips, right? The only problem is, right, is that you've been suffering so many losses in this particular trade. How do you know that this is the right way to trade this particular pair? How do you know it, right? How do you know this pair is moving up? When in all actuality, you know, on the hourly chart, it would appear that it's moving down, right? So how do you know? That's a good question. And here's how I would play this right here for all involved. So if we know on the higher chart, they have prices moving up, then what we should be doing then is when you look on the lower charts, right? And here's the thing. Look at this right here too. Let's keep it simple, right? Here goes a low. Here goes a higher high. Higher low, higher high. Right? Or if you want to say it simple, right? Here goes a higher low. Higher low. Higher low. Higher low. Higher low. Right? Higher high. Higher high. Higher high. Higher high. Higher high. So if price is making higher lows and higher highs, what is it doing? Price is trending up, right? So overall, regardless of, you know, what I may be seeing as far as patterns on a smaller scale, right? Even though we may be seeing this right here, so we understand that this is just a pullback, it's a retracement, right? Because overall, price is moving up, right? We understand that this right here may be the start of a continuation, right, of the original trend, which is pushing up, because now we may be coming out of retracement, right? But then when we get this other pullback, then we understand that, hey, it's not the start of a new trend, it's just another pullback for this particular pair, right? So in other words, this right here should be the C right here, but it could be forming another lower C here. Don't know, we're gonna see. Or it just could be, this is putting back some. Or it could be a double bottom, right? Price is pulling back, we get the retracement, it hits the 50, right? It pushes back up, price comes back down again, and it could be the double bottom, right? Now, so what we need to be doing, I guess, and what we need to be before we can start coming in and trading, and this right here is just a way to maybe make ourselves a little bit more secure, especially on some of these other pairs. Before we start taking a buy position in these pairs, right? Especially if we know we get something that's kind of volatile, it's kind of crazy, right? Maybe what we need to do is wait till we get to the buy side on the higher time frame, right? So wait till you get to the buy side on the daily chart, right? And if it's on the buy side over here, then it sure as heck should be able to be on the buy side on the sell side. And in that way, when we come to the sell side, when we come to the lower time frames, right? And then we get a signal to buy. Excuse me. We'll be more confident in our signal to buy, right? Or if we get a signal to sell, we'll be more confident in our signal to sell. Either way, we'll have more confidence in what we're doing because now we'll feel like we're moving more so lock in step with the overall price than just on an individual time frame, and what we may or may not be moving, in that direction. If that makes sense. I don't know if that makes sense to you. I'm sorry, I'm doing this right here and talking at the same time. I do apologize. But essentially, what I'm trying to communicate to you is that when you look at a pair, right? Because it can be confusing sometimes. That's where a lot of people get they make mistakes, right? And we're talking about it, um, risking money and looking at opportunities in the market, and it can be confusing. And even with the ABCD method, you want to have a little bit more. You want to have as much assurance as possible that you're doing the right thing. And I think that one of the things that people get caught up on is they essentially get trapped in when they're thinking price is moving up, but really what price is doing a retracement back. That's what I'm trying to say. If that makes sense, right? Because it's easy to come in here to look at this hourly chart and put on fibs. And don't get me wrong, I mean, you can still get, make money, right? You're putting on fibs in a retracement because typically that's what we call Gartley's, right? And it's looking for, price is looking for that the ABCD pattern in the retracement. But here's the thing, right? To have a higher probability of success for you is, my own personal opinion, is I think you have a better opportunity for success if you're trading in the direction of the overall trend versus trading counter trend. And if you were getting into the U.S. Canadian dollar, buying into this right here over the last couple of weeks, whatever, you really were trading counter trend, unfortunately, right? Because even though here on the hourly chart, it looks like, okay, this may be a buy because this is the downward trend and now it's coming over it. And as you see, it's really kind of doing nothing. It's going kind of sideways, right? All right, and we did have a fib on this right here, and it was pulling downward, but then it pushed back through that fib, and so we say, okay, well maybe the downward trend is over, and now we can start buying going up. But the reality is that if you look on the daily, it was never a signal to buy on the daily, right? It's still in sell mode on the daily, right? Because it's under this downward trend line, right? So once price crosses over, it goes into the buy zone. It gives us authorization that they had a buy, right? And think about it. Just look at this right here, for instance. I mean, look at how much more opportunity you have to buy when it's going up versus when it's going down, right? Look at how much momentum is behind this right here as it's going up versus when it's going down, right? When it's in the buy zone, there's a lot of opportunity for price to when it's in the buy zone, there's a lot of opportunity for you to make money on these pairs versus when it's in the sell zone and it's selling off, right? So just kind of be mindful of that, keep that in place, and hopefully it'll help you when you're making money trading, okay? Let's look at the next one, which is the U.S. Australian dollar. This is the one that we're in right now, currently. Let's look at this one. Probably use the same logic on this one too. But let's look at here. All right, so here's the downward trend line. Price went up, hit the downward trend line, and now it looks like it's coming back down. So once again, this is one of those ones that's really kind of tricky, man. We're actually in it right now. Here goes a take profit here. The idea would be that once price crosses over, closes over this right here, that should have a minimum behind you to be able to push through to hit that target. And we'll see how this plays out over the next 24-48 for this particular pair. I think that we could go ahead and do that today, possibly. Price pushed up through, and actually when I initially put this right here, it's kind of like an arbitrary line, but what I found is it's actually a pretty compelling support resistance line. I didn't realize it when I put it in there, but if you look at it right here, You didn't even take it all the way out. But you can see, if you took it all the way out, you can see where price had the support for here, here, um, here, resistance here. And then of course you can just see how it's been support here, 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 resistance, and now it's back at support again. So it's actually a pretty strong support resistance line. I didn't even really pay attention when I did it. I was just putting it out there. Um, kind of like a little marker to help me remember where I got in at this thing around about. And but as you can see right now, price is bouncing off of it, and hopefully we can get that push um, to hit the take profit either today or tomorrow. So we're about 62 pips away, so we're less than 100 pips away from our target, which is good. Always good, and it's always good to see bulls coming in when you hit a support or resistance, right? Those are all really good signals here. So we'll see how this plays out. And then also, like I said before, if you look at it on the daily chart, anyway, it's not here anymore. But if you look on the daily chart, our downward trend line price touched off of it and pushed back. But we'll see if it closes above. Close above is going to give definite confirmation that price is going to be making its way up. And here's the thing. So right now we got to take profit here. All right. Once this thing crosses over and goes into our profit zone, that's going to give us added confirmation to then continue to stay in this trade even on the lower time frames, because now we're going to see on the overall time frame this thing's in the buy zone, and so that means on the lower time frames we're going to be looking for periods to get in here and buy. So anyway, guys, hopefully this has helped you, right? If you got any questions, please send us some emails, questions at forextechmagazine.com, forextechmagazine@gmail.com. Love to hear from you if you're working on any trades and you want us to kind of like go in and look at the trades that you're trading. Let us know too. We'd love to look at that. We'll do a whole show around that. Just remember that right now I'm saying that it looks like everything right now that we've been looking at is kind of a hold pattern right now. Not seeing anything that's telling us to get in here and buy at the moment. So would caution you that if you are planning on buying, I wouldn't do it today. Right now at this moment, I'd wait till price crosses over the downward trend line on the pairs that we looked at before we got into it, and I would definitely just be cautious, especially on the Great Britain pound pairs, until after we get this vote on the 29th about Brexit, just because it's definitely going to have an impact on the market. Just don't know which way it's going to go right now, and if you are in the market right now and you're trading, just be cautious. And it's not a bad idea to take money off the table. If you look at this trade here that we're in right now, right? We got $400, let's say $400 in this trade. Not a bad idea to go ahead and take that money off the table for myself, or I can stay in it and just kind of see what happens. Stay in and see what happens. I'm prepared for a loss if I take one. Not that I should be taking one. Should just be adding this $400 to the pot and be done with it. But I don't know. Feeling a little risky. It's a Monday. Feeling myself right now. So I think I'm just gonna go ahead and stay in it and watch how it plays out. But if you're not in that situation and you can't afford to do it, don't do it. Don't take that risk. And also remember too, this account right here that I'm trading right here is a demo account, so it's not real money right here, right? So I can afford to lose fake money, right? My other account that we're trading with the Aussie US dollar, that's real money. So that right there, I might not necessarily be so frisky, but I do believe that we're in the right direction. We're in the right mode for this trade. So this one right here, I'm just kind of looking at it. We're about 60 pips away, 62 pips away from where we our take profit. I want to go ahead and leave that money in. We have profit on the table right now. I'm not ready to take that out. I want to go ahead and push it up, get the other 60 pips, and then close it out. So, God willing, we'll close it out by before the end of the week. Hopefully, by the end of the day or tomorrow. Anyway, once again, guys, listen, it's been fun. Thanks for tuning in. Tonight's going to be a short night. I have a massive headache. I think I'm coming down with the flu. So I wish you well. And like I said, if you got any questions, hit me up. Take care. God bless. And I will see you again in another 23 hours. Take care.